Hi CMA students. The changed examination pattern demands from all of us that we have to practice MCQ questions. And here I am to help you all in practicing MCQ questions. Don't worry, we'll do super fast practice. Important, please maintain a notebook so that you can write the important points, concepts which you will learn through these MCQs. Second important thing, try to give answers to the question, just don't listen and be a passive spectator to this video. So be active, be participate, try to give answers along with me, try to match your answer with my answer. That would be the best way in which you can test your knowledge as well as improve your knowledge so that you can score well in direct taxation. So are you ready with your notebook, pen? Yes, let's start. So the first question which we have to practice is that the the number of identities included in the definition of a person. Now person is defined in section 2 subsection 31. Yes, section 2 subsection 31, person's definition is given. In that they wrote a list of 7. So what is the answer? How many identities covered? 7 identities covered. Absolutely right. What are they? Just for reference I am telling. First one is individual, second one HUF, third one partnership including LLP, fourth one company, fifth one AOP, BOI or association of persons, body of individuals, right? Sixth one is local authority, seventh one is artificial juridical person. So these are 7 included in the persons, right? If I ask Usmania University, Delhi University, which type of person it is? Yes, it is artificial juridical person, not covered by the above 6. If I say X and Co, which type of person it is? You should tell it is partnership. Yes, why? Because if it is company, at the end limited word or private limited word or OPC private limited words will be attached. So what I am going to do with these questions? I am not only going to discuss with you these questions, but also will ask you similar questions which can be asked in the MCQ. So are you ready? Participate with me, try to learn as much as possible from the information which I am going to give. So first question completed, right? How many entities? 7. First one individual, second one HUF, third one partnership firm including LLP, fourth one company, fifth one AOPBI, sixth one local authority GHMC, right? Seventh one artificial juridical person. These are 7 included in the definition of person. Wonderful. Now comes the second question. What is the second question? Yes, a trust. So this question is regarding trust. So a trust shall not be considered as a charitable trust for, yes, according to the section, getting the benefit of section 11, right? Here it is section 11. Please remember it is section 11. When the commercial activities in the previous year exceed 10 lakhs, 25 lakhs, 15 lakhs, 30 lakhs. Now I know that many of you would have not even read the topic called as trust. So answering this question is difficult. Don't worry. If it is a charitable trust, you want to start a charitable trust, first thing you have to register under section 12AA of the Income Tax Act. So charitable trust must be registered under 12AA of Income Tax Act. Right. Second important thing, if you register under 12AA, you will get the exemption under section 11. Whatever income the charitable trust earns will be exempt under section 11. Right. But they said, if your commercial activities exceed a particular limit, then the exemption is not given, not treated as charitable. So what it is? Let's understand. So they gave a list under section 2 subsection 15 what is charitable trust. If it is created for the poor, for medicines, for education, for health, for yoga, so you are serving in these areas, then you are treated as charitable trust. And any other public utility is the last word used. And public utility is huge, right? If you are conducting marriages of poor children, that means poor families, they have to conduct marriage, samuhika marriage, group marriages. You are doing so many activities which are not listed above or I did not discuss. They said most of the amounts what you receive should be donations, right? But you can receive or earn some money through business also. Now, how much? They said not more than 25 lakhs. But wait, this is outdated provision. It is before 2012, 25 lakhs rule was there. So this answer is wrong. All the four answers are wrong. Then what is the right answer? Your receipts from business should not exceed 20% of your total receipts. Suppose example, you got some 500 rupees as money into your charitable institution. So if you received 500, not more than 100 rupees should be from business, not more than 20% should be from business. That means 80% of the money or more than 80% should be donations only. That's what they wanted to tell. Clear? Right. Let's go forward. Now what is the next question? This is super important and super easy. Deduction, right? Available under section 24A. First thing you should try to remember. What is 24A? Where this 24A section comes? Absolutely right. Under the head house property. And you know the pro forma of computing house property, right? First you will take gross annual value. From that you will deduct municipal tax. And when will you deduct municipal tax? If it is paid by the owner, right? If it is paid by the owner, then only you will deduct it. Suppose you pay advance municipal tax, it is not deducted. So if municipal tax which is due is paid by owner, then only deduction is given. Then you will get the net annual value. From that net annual value, deductions under section 24 are there. Now you are remembering, right? 24A is standard deduction at the rate 30% of NAV. And 24B is deduction for interest. Very good. Now come to the next question. Expenditure incurred by a business for ready to use software is entitled to benefit of. Now they are asking 15% of depreciation or 30% of depreciation or 60% of depreciation or 100% of as revenue expenditure. Now entirely the question is a bouncer for you. I understood. Don't worry. I am there to help you. That's why you are listening to the video. Concentrate and listen. Write each and every point. Very good. Let's start. So there is some section called as section 9. You studied this section 9 in residential status chapter. Very good. Now what this section 9 talks about? Deemed to accrue or arise in India. Section 9 talks about what? Deemed to accrue or arise in India. Wonderful. Now, government said that if you are paying royalty for a software developed for you, obviously royalty is an expenditure for your company. Suppose Microsoft developed a software for you, for your company, specifically for your company. Then obviously you may pay certain royalty which to the Microsoft company. So you as a company are in India, you are resident. Microsoft is non-resident. So when you are paying royalty, obviously it is deemed to accrue or arise in India because the service is consumed in India. No problem with this. But when you are purchasing certain software, like Tally is there, ready-made softwares if you are purchasing, you are considering it as an computer, a part of computer, and you are claiming depreciation. This was the common practice. But in 2012, when at that time Pranav Mukherjee was the finance minister, he said that even if it is purchased software, still we will treat it as royalty. Right? Still we will treat it as royalty. So if it is customized software or purchased software, you are making payment from India to Microsoft, that means outside India. What they are treating? They are treating that the payment you did is royalty. Okay. So what is the connection? Let us understand. Now for you, it is an expenditure, right? You are a businessman in India and you paid royalty, right? So that's why for you it is an expenditure. And ready to use software like Tally, ERP, right? Okay. Now when it is expenditure, revenue expenditure, regular expenditure, 100% deduction should be given. Yes or no? Right? So what is the right answer? 100% as revenue expenditure. Because in 2012, ready to use software supplied by Microsoft to an Indian entity is deemed income for Microsoft, and for you it becomes an expenditure automatically. So yes, 100% deduction as revenue. Okay. We will continue with the fifth question. The basic exemption limit for a resident super senior citizen, that means a person who is above the age of 80 years. What is the basic exemption limit? Yes, 5 lakhs rupees. Absolutely right. You are wonderful. Good. Now, next question. The provisions relating to interest for delay in payment of refund are given in section 244A. So 244A talks about interest on refund. Suppose income tax you paid extra. So income tax department will give you refund. And if there is a delay in paying the refund to you, not only they will pay you the refund but also interest on such refund. Under which section? 244A. And please remember that refund is not your income, but interest on refund is income under the head other sources. Interest on refund is income under the head other sources. Okay, because refund is your money you getting back, correct? But interest on refund is not your money, you are earning. So it is income from other sources. Come on, let's go to 7th question. Which of the following can be corrected, right, while proceeding the return of income under section 143? So basically 143 is a notice under the income tax for corrections. What correction? Arithmetical error and wrong claims. Right? Arithmetical error and incorrect claims. So here you can see that arithmetical error is given in option A, but in present context, you should remember two words: correcting the arithmetical error and incorrect claim should be the answer. Very good. Let's go to the next question. Now, notice under section 156. Generally, if income tax department wants money from you in the form of tax or in the form of interest on tax, in the form of penalty or in the form of fine, if they are demanding from you money, that money demand will be under 156 section. So what should be the right answer? Absolutely, tax demand. But this question options can be changed. Interest on tax can be added, penalty on tax can be added, fines on tax can be added. So tax demand includes all these things. Please remember. Next question. The question is huge, right? As per section 271, right? 271H, where a person fails to file the statement, right? If they fail to file the statement of tax deducted at source or collected at source, that returns they failed to file, then what is the penalty? The penalty is rupees 1 lakh rupees, or the tax deducted, whatever has to be deducted, whichever is lower, right? Whichever is lower, 1 lakh or TDS or TCS, whichever is lower, right? That's why option A is right. Wonderful. Next question. The threshold exemption limit for equalization levy is. Now, who attended classes with me know this. But again, you may know, may not know, that's why I am telling. Equalization levy is a tax on online advertisements. Suppose example, I am advertising for on Facebook, Instagram, Google or anything. Suppose I paid 2 lakhs, 3 lakhs, 5 lakhs, whatever it may be. Then I have to deduct equalization levy. When I should deduct? If my payments to Facebook, Google exceed 1 lakh rupees for specified services, and in specified services only online advertisements are there. If it exceeds 1 lakh rupees, 6% equalization levy I should deduct and deposit with our government. In section 40A, when I teach disallowances, under section 40A, when I teach disallowances in PGBP chapter, there I teach to all of you. Okay, right, very good. Now let's come to the 11th question. What is 11th question? Rate of surcharge. Yes, rate of surcharge applicable to a foreign company. Please carefully read it. Foreign company having total income of how much? 8 crores. So remember that for foreign company, if the income is more than 1 crore, 2% surcharge. Income is more than 10 crores, 5% surcharge. Come on, again repeat with me. Income more than 1 crore, 2% surcharge. Income more than 10 crores, 5% surcharge. Now, here it is exactly 8 crores. What is the rate of surcharge? Absolutely correct. You are thinking wonderfully. So, the rate of surcharge is 2 crores. If in the question they give 12 crores, then 5% should be the rate of surcharge. Very good. Come to the next question. Now, question number 12. Come on. Income computation disclosure standards are applicable to which head of incomes? There are only two heads to which this ICDS applies. One is PGBP, second one is other sources. PGBP, other sources. PGBP, other sources. So ICDS does not apply to salary, does not apply to house property, does not apply to capital gain. It applies to PGBP, other sources. So what is the right option? D option is right. PGBP and other sources. That too, if the method of accounting followed by the assessee is accrual basis of accounting. So for computing PGBP income, for computing other sources income, they follow accrual basis of accounting, then only ICDS applies. Right? Okay. They may ask you one more question like this, that what are the method of accounting followed by the assessee for income tax purpose? So they are covered under 145 subsection 1. What are the two? Accrual basis, cash basis. So remember, ICDS is applicable to two heads of income, PGBP and other sources, if they follow accrual basis. That means if the assessee follows cash basis, is ICDS applicable? No, not at all. Next question. Now 13th question. Come on, we have to do it fast. New plant and machinery is the concept, right? New plant and machinery, if the assessee is using for electricity undertakings, correct? For eligible electricity undertaking. What is the rate of additional depreciation? You all know additional depreciation will be charged at 20%. Suppose it is in Telangana, Andhra Pradesh, West Bengal and Bihar. Backward areas of Telangana, Andhra Pradesh, West Bengal, Bihar. Will it be again 20% only? The answer is no. It would be 35%. Suppose they say plant and machinery is purchased on 1st December 2019. Then what should be your answer? It is used for less than 180 days. So half depreciation. So if it is 20, it will be 10. If it is 35 like Telangana, Andhra Pradesh, West Bengal, Bihar, then 35 will be replaced by 17.5%. And the balance will be given in the second year. So additional, so many, and that's they used new plant and machinery word. If suppose it is second hand, then additional depreciation, is it given? No. So additional depreciation, so many things you need to remember. New plant and only on new plant and machinery additional depreciation is given. Right? If it is Telangana, Andhra Pradesh, West Bengal, Bihar, 35%. If it is all other places, 20%. If used for less than 180 days, half the rates discussed. If it is residential dwellings, if it is guest house, if it is road transport vehicles, if it is ships, aircraft, scientific research assets, is additional depreciation given? The answer is no, no, no. If it is old, second hand plant and machinery, is additional depreciation given? The answer is no, no, no. Come on, let's go to the next question. 14th question we are into. Wonderful. Concentrate. You will be able to learn so many new things, right? So maximum amount of exemption. So what they said, maximum amount of exemption available in respect of an amount received under voluntary retirement scheme. This is from salary chapter, correct? If you are receiving voluntary retirement or you are receiving retrenchment compensation, what is the maximum limit? 5 lakhs. In both the cases, if the same question is given, only voluntary retirement is replaced by retrenchment. Don't worry, the limit will not change. Maximum 5 lakhs. Come to the next question. Now coming to the 15th question. An individual can claim deduction from his gross total income in respect of expenditure for the medical treatment of a dependent being a person with disability up to how much? Maximum limit of. So generally I'll tell you, if the disability is less than 40%, no deduction is given. Disability is between 40 to 80%, 75,000 flat deduction is given. If the disability is 80% or more, we call it as severe disability. 80% or more, 80 to 100%, severe disability. 1,25,000 flat deduction is given. right? So what is the maximum deduction under section 80DD? Disabled dependent, 1,25,000. Suppose example, a father is there, his child is disabled. Then father will claim deduction under 80DD. But suppose if the disabled is working and the disabled person himself wanted to claim deduction, under which section he will claim? 80U section. Under which section the disabled person himself can claim the benefit? Under 80U. If the father is filing return and he wants to claim deduction for his disabled child, then 80DD. Who can be disabled dependent? It can be brother, sister, children, spouse, or parents also. No others than this list. Let's go to next question. You are concentrating great, so more concentration required. Come on, come on. Okay. Dividend from a company which is, right, engaged in agricultural activity is it agricultural income? Is it business income? Is it partly agriculture, partly business, or none of the above? Hey, I'll tell you, Godrej farming is there. Godrej farming is doing agricultural activity and earning money. So, Godrej farming's profit is agricultural income. But the shareholders receiving dividend are getting the returns for their investment. Right? The shareholder is not engaged in agricultural activity, right? That's why whatever shareholder is earning as dividend is not agricultural income, it is a return on investment, right? That's why it is income from other sources, it is not agricultural income. We will not call it as agricultural income. So what should be the answer? None of the above. Go forward. Now next question. 17th one. Come on, let's go forward. So what they said? Short term capital gain not covered under 111A. Come on, please carefully read. Not covered. Many a times we ignore such words. Not covered. Short term capital gain, if it is from sale and purchase of shares in the stock exchange where securities transaction tax is paid. So any securities dealt with in the stock exchange where STT is paid, it is covered under 111A if it is short term. Right? And what is the rate at that time? 15%. At that time, what is the rate? 15%. At that time, what is the rate? 15%. Okay. But are they talking about 111A securities traded in stock exchange where STT is paid? Are they talking about that? The answer is no. They are talking about not covered. So, this type of short-term capital gains not covered under 111A is taxable on slab rate basis. Is taxable on which basis? Slab rate basis. So taxable as normal rate applicable to the assessee. Now I said slab rate for individuals only. But if it is company, then normal rate. Partnership firm, their normal rate, right? That's why correct option is C, taxable at normal rate. Come to the next question. What is it? Yes. Loss from house property can be carried forward and set off in subsequent 8 years. Correct? Subsequent 8 assessment years. Now, actually loss returns when it should be filed. Generally, income tax returns should be filed under section 139 subsection 1. Okay, 139 subsection 1 talks about filing returns, due dates for filing returns. If you are assessee engaged in international transaction, 139, if you are an assessee engaged in international transactions, then till November 30th of the assessment year. If you are an assessee not engaged in international transaction but subject to audit, then 30th September of the assessment year. But if you are not in international transaction, not subject to audit, then till 31st July, you should file returns. And loss returns are covered under 139 subsection 3. They should be filed. If you file loss returns, then only you will be able to claim loss returns. But for claiming house property loss, you are not compulsorily required to file returns on time. You are required to file returns for sure, but there is no compulsion that you should file the returns on time. Right? That's why they said that even if the return of loss is filed after due date, you can claim the loss from house property. I will add one more word. If there is unabsorbed depreciation, that also you can claim even if return is filed late. So house property loss, unabsorbed depreciation, both can be claimed even if you file return in time or file late. But filing return is compulsory. Okay. Suppose in the same question, they remove the word house property and they say business loss. Then what would be the answer? Yes, business loss can be claimed only if you file the returns on time. Business loss can be claimed only if you file the returns on time. Come on, next question. The basic exemption limit in case of a non-resident firm word is very important. Non-resident bolte ch we jump. Wow, so easy question sir. 2,50,000 khatam. Suicidal answer. You are doing wrong. Non-resident firm. So read each and every word carefully. So is there any basic exemption limit for firm? The answer is no basic exemption limit. Firms are taxed at the rate 30%, no basic exemption limit. So what is the basic exemption limit? None. No basic exemption limit. D is the right answer. Okay. Firm. Very good. Now question 20. TDS under section 194 in respect of dividends if, right, payee furnishes PAN is. Generally, this question is from TDS chapter. And one more thing you should remember, if you furnish PAN, then whatever rate specified, that rate is applicable. Right? If you don't furnish PAN, then what will happen? Then they say if you don't furnish PAN, whatever rate given under the TDS chapter or 20%, whichever is higher. Rate given in TDS chapter or 20%, whichever is higher. Right? One more thing. If it is relating to employees provident fund covered under section 192A and you did not furnish PAN, then maximum marginal rate 30% will apply. So many things are there, you have to concentrate. But sir, you are talking something other than the MCQ, sir. Yes, I know. But if they ask such similar questions, surrounding questions, you should be able to answer, correct? So again, come concentrate. What they said. If you furnish PAN, what will happen? Whatever rate given, that rate will apply. If you don't furnish PAN, what will happen? The rate given or 20%, whichever is higher. Okay, but if it is relating to 192A, that is employees provident fund, then don't furnish PAN, 30% rate will apply. Okay, but here in this question he furnished PAN. Then what is the TDS under 194 relating to dividend? Please remember, in case of dividend, the company will pay dividend distribution tax, and for the shareholder it is exempt. For shareholder it is exempt. For shareholder it is exempt. So what is the TDS rate? Nothing. This question itself is wrong. Okay? Because there is no TDS applicable. 194 section is not applicable now. Okay? Come to the next question. 21st question. Tax payable by a resident individual if he has long term capital gain of rupees 2,60,000. Okay, if you have 2,60,000, what will happen? You know, long term capital gain, 20% is the rate of tax. Yes, under which section? 112 section. Normally 112 section is for long term capital gain, 20% is the rate of tax. Perfectly fine. Now basic exemption limit 2,50,000 benefit you can take. So how much is there? 2,60,000 minus 2,50,000. So 10,000. On 10,000 what is the rate of tax? 20%. So what will come? 2,000. So what is the tax payable? 2,000. But is this right? The answer is no. Because 87A rebate will apply. 87A rebate is given to whom? Resident individual whose income is less than 5 lakhs rupees. Here how much? 2,60,000. So how much rebate is given? Tax payable as we calculated 2,000 or rupees 12,500, whichever is lower. So now entire tax calculated 2,000 is given as rebate. So how much is the tax? None of the above. No tax will be charged. Suppose example, this question they changed small, a little change they did. They wrote non-resident. Now generally non-resident also gets 2,50,000 exemption, but where special rates of tax are there, he will not get the benefit of 2,50,000 exemption. Non-resident where special rates of tax are applicable, like long-term capital gain 20% is there. Will he get this benefit? The answer is no. Then what will happen? 2,60,000 into 20%. How much will come? 52,000 tax will be there. Okay, plus cess. So C option will be there if they give non-resident. D option because it is resident. Okay, this question will give D answer. But if they change the word, they will write non-resident, then we'll write C as the answer. Come to the next question. 22nd, very important. Come on. Winnings from lotteries. Yes. Rupees how much? 50,000. And expenses incurred 5,000. What is the taxable income? Is expenses allowed as deduction in relation to lottery? No expenses allowed as deduction. No set off of loss. No carry forward of loss. Remember? So from these 50,000, you will be very smart. You will deduct 5,000 and say 45 is the right answer. Wrong. What is the right answer? There is no deduction for expenses. So totally 50,000 is taxable. Come on, next question. What is the next question? 23rd question. Now they gave net salary, right? Net salary after deducting tax at source of rupees 10,000. That means TDS is 10,000. and your net salary is how much? 2,50,000. The amount of taxable salary is. The amount of taxable salary is. So what is taxable salary? 2,50,000 is after TDS, right? So we should take 2,60,000 as the taxable salary. 2,60,000 as the taxable salary. कितना लेंगे? 2,60,000. Okay, 2,60,000 as the taxable salary. Now, this should be the answer, right? Okay. Now, net salary they said. Net salary after deducting tax at source. If they used the word net salary received, if they said net salary received 2,50,000 after deducting 10,000 TDS, then what is your salary? Okay, your gross salary will be 2,60,000. And you remember, standard deduction 50,000 will apply. In that case, your taxable salary will become 2,10,000. Okay. In this question, if they ask what is your gross salary, so 2,50,000 plus 10. So 2,60,000 is your gross salary. 2,50,000 plus 10 gross salary, 2,60,000. But if standard deduction we deduct, 50,000 is our standard deduction, then taxable salary will be 2,10,000. Wonderful. Right. They said 24th question, correct? What is the deduction of scientific research if you want to claim under 80 GGA? Obviously, if you are contributing for scientific research or for the rural development, right? So they said 100% of such payment or such donation is allowed as deduction. But please remember, entire amount should be paid through account payee check, demand draft, NEFT, RTGS, only banking channel, right? Then only you will get the benefit of deductions, right? So what we discussed, please remember this thing, 100% amount deduction. If you are a business assessee, you claim the deduction under section 35 CCA. There also 100% deduction if you are a business assessee. But if you are a salaried assessee, can you claim under 35 CCA? No. For you, the 80 GGA section is given. For you, 80 GGA section is given. Clear? Good. Twenty-fifth question. Agricultural land located in rural area in India, let us assume. So if agricultural land is there in India and that too rural, not a capital asset. Correct? You studied capital asset definition and in that exceptions are there, right? So if it is agricultural land in rural area in India, then it is not a capital asset. If they say agricultural land in rural area in Bangladesh, Taiwan or any other country, then it is a capital asset. But if it is a land used for agriculture in rural area in India, not a capital asset. So we completed 25 MCQs now. So prepare with these MCQs, revise these MCQs. In the next video, I'll add again 25 new MCQs for you and revise through this so that your concepts become strong. Do share the video with all your friends. Like the video and comment how did you feel. If you like that I should add specific videos for TDS, TCS, PGBP and deductions, do comment. I'll do it for you. Take care. We'll meet in the next video.